Remember, we need to determine what is the fair value at year end, right? Now, when we look at this, the second paragraph below our table, I'm going to make use of pink for you to be able to follow me. They indicate to us in the second sentence, however, on 30 September 2019, the annual JIBAR should have been decreased to 6.56. Do you see this? Now, remember, if we still need to determine the fair value at year end, we will have a future value which will remain the same. They didn't indicate to us any changes in terms of our future value. Our period at year end will now change the 16 minus 4. Because remember, on initial recognition, when you look at your timeline, guys, you can just move my screen a little bit. When you look at the timeline, on the left side, on 1 November 20.18, we had 16 payments, okay? So 4 payments were made, therefore we now have 12 payments remaining. Therefore, our N will be 12. You with me on this? Our actual payment will now be the 150 million. Remember, times our JIBAR plus the 2.25%. Because this section relates to the specific contract. But the JIBAR has changed. Therefore, this will be the 150 million times the new JIBAR, which is the 6.56% plus the 2.25%. And remember, divide this by 4 because quarterly payments. And this will be an amount of 3303750. Look at this, guys. Remember, our JIBAR has changed. This relates to this contract, JIBAR plus the 2.25%. Okay, now we still need to determine what is our I. Now, because we need to calculate the fair value, we need to use our market rate. When you refer to the given scenario, they've indicated to us on the next page. Here, guys, look at the pink paragraph for me, please. On 30 September 20.19, which is our year end, the market-related interest rate of similar debentures without conversion, remember, think cash, was 8.75%. Therefore, we need to use this to calculate our fair value. In our calculation, our I will be now the 8.75%, but we need to divide this by 4, and this will be 2.19%. Therefore, our present value, which will be the fair value because we've used a market rate, will be 150,195,993. Okay. And we are now able to identify the movement. I'm including this on my timeline purely for explanation purposes. In my calculation, we are able to identify that our liability has increased. Therefore, when you look at the right side of my screen, I have included that the carrying amount was the 147,499,340, calculation 1.1. And there's a movement of 2.6 million. Now, when we look at this, guys, it is now the 150 million minus the 147,499. Therefore, there is an increase, and this is a liability. Therefore, we will have to credit the financial liability at fair value through profit and loss. And you will now remember, look at my journal entry at the bottom of your screen, right side. 30 September, we debit our fair value adjustment in our profit and loss. Why? Because the standard indicates to us, when you look at our principles, that if there's a fair value adjustment right side of your screen, guys, fair value due to changes in credit risk, which we don't know at this point. They only indicated this to us in part B. This will be recognized in our OCI. All other risks will be in our profit and loss. Right, therefore, if they have indicated to us that there's a fair value adjustment due to credit risks, then this will be OCI. But there's nothing, they didn't indicate this to us. Therefore, this fair value adjustment will be debited in our profit and loss and credited in our liability account. And this is our calculation number 3. Okay, now remember, when you look at your requirement, we still have to include our deferred tax journal. Now, with deferred tax, as always, I prefer to make use of my calculation, my deferred tax calculation table. Right, this is my deferred tax calculation, and remember, I do prefer to make use of my table and my columns. They've indicated to us the opening balance for 2019, which will be the closing balance for 20.18, is 0. We now need to include our 2019 details, okay? Now, first, I'm going to include the initial transaction. Now, our carrying amount on initial recognition. Remember, when you refer to our calculation on initial recognition, left side, guys, this calculation 1.1 on initial, we've determined for accounting purposes will be the 147,499,340. Therefore, this is the carrying amount for accounting purposes, 499,340, right? But what will the tax base be for tax purposes? Remember, SARS does not see this. SARS does not see this as a compound financial instrument. SARS does not see this as a compound financial instrument. We recognize a compound financial instrument for accounting purposes only. Therefore, according to SARS, BB still has to repay the total 150 million. Therefore, carrying amount minus the tax base. Remember, a minus minus a minus becomes a positive. Therefore, this will be 25,00660. Now, back to our basics. The carrying amount of our liability is less than the tax base of our liability. Therefore, when you refer to your IS 12 principles, the carrying amount of your liability is less than the tax base of your liability, and this will be a deferred tax liability. Right? Therefore, let's include this. This will be our deferred tax liability, and this will be 700,185. Now, at year end, look at this, guys. At year end, our carrying amount will now be, for accounting purposes, the fair value. Therefore, when you look at our calculation on the right side of your screen, calculation 3, this pink circle, guys, our carrying amount will be the 150,95993. And this is for accounting purposes, 150,195,993, and for tax purposes, this will remain to be the 150 million. And our temporary difference will be 195,993, right? Now, when we look at this, guys, first I need to include that. That is my calculation 3. Okay, so the carrying amount of our liability exceeds the tax base of the liability. Back to basics. If the carrying amount of your liability exceeds the tax base, this will be a deferred tax asset. Therefore, we have an amount of 54878 deferred tax asset. Okay, but guys, now when you look at this, what will our movement be? What will the movement be? Our total, guys, the movement will be from a negative to a positive. You with me on this? From a negative to a positive. Therefore, if we move from a negative 700,185, we move to a positive 54878. We have a movement of 755063. And that movement we need to recognize in our profit and loss. Therefore, guys, before you recognize this, just quickly look at this on initial recognition. This temporary difference, 2500660, do you agree with me that this relates to the equity portion? Okay, this relates to our equity portion. Therefore, when you refer to our journal entry number 1 on the left side of your screen, we credited the equity component with a 2500660. Therefore, if we need to recognize this equity portion, this will be recognized in our deferred tax, but we will have to debit our equity component, and this will be statement of changes in equity with a 700,185, and we need to credit our deferred tax and our equity, or relating to the equity, guys, in our statement of financial position with a 700,185. Right, you see this, guys? Okay, 700,185, we credit deferred tax liability. Okay, that's the equity portion. Now, we have already determined the portion that should be recognized in our profit or loss, 755. Therefore, 755063, 755063. Now, remember that this portion relates to our profit and loss portion. Now, when you look at our journal entries, I just want to explain this to you because this is in this solution, and I don't want you to get confused. If you look at the journal entries recognized through our profit and loss, not the interest, guys, because when you refer to our given scenario, they've indicated to us in the additional information section, all interest paid in the debentures, including amortization of any premium or discount, is deductible for tax purposes. Therefore, when you calculate your current tax, remember, you have to determine what is our accounting rules, we've deducted this, and what is our tax rules, we've deducted this. Therefore, there's no difference, right? Therefore, we don't take that into account. But when you take into account the fair value adjustment, thus 2696653, and you use the 2696653 times 28%. And guys, that 263, I just want to ensure that happy. Okay. If you take that times 28%, you will have a total of 755,063, right? And that will have an effect on your profit and loss. You with me on this one? And we need to debit our deferred tax, statement of financial position, and we credit our income tax, expense, in our profit and loss. Okay, so we credit the income tax expense. If you think about this, guys, our journal entry here, we have debited our fair value adjustment. Therefore, this is an expense. Okay, happy. Now that expense is tax, sorry, not tax, this is accounting, guys. This is accounting rules, okay? For tax rules, this doesn't exist. You with me? Therefore, we take this out. If we take this out, this will decrease our tax payable, our profit and loss expense portion. Right, guys, you have the solution. Please work through this. Please ensure that you are comfortable with the principles. I think this is a difficult question, but it's a good question.